Hello, scholars. I once again welcome you to my stock analysis simplified show. My name is Joseph Ejikoji, and today the stock I will be looking at is Macy's. Well, I'm sure everybody knows about Macy's. Macy's is a very, very, very popular company. And as you know, they do this Thanksgiving parade every year. And it's a company that have, quality products. They sell, let me start from the history. Macy is a store chain, a department store chain that was founded in 1858 by Roland Fuse Macy. That's how he got that name, okay? So they sell wide range of merchandise. So clothes, shoes, and, very, they are high-end quality products, quality shoes. You can get quality shoes from Macy's, and get quality clothes from Macy's. I mean, even though they might be high, the price might be higher, but they sell quality products. I bought some stuff from Macy myself. So Macy in general, they sell a wide range of merchandise under various brands, including Macy's and Bloomingdale's, clothes, accessories, cosmetics, consumer goods in general, home furnishing. Anyway, today my analysis of Macy's stock will be based on three things, as I always do when I'm presenting this stock analysis simplified. So I will be looking at the balance sheet, the income statement, the company stock information. So income statement and cash flow statement as well. So I'll be looking at some of the items in this financial statement, then plus a little more information about Macy's. So let's dive right into it, okay? So let's first of all go to the place where we can get information free of charge about Macy's. Where else than Yahoo Finance? So I'm gonna put this trading symbol for Macy's, which is M. You can see that it pops out, say Macy's Incorporated. I'm going to click it, and then we'll have it to open up. So as of today, Macy's stocks is trading at $17.39 per share. So at this price, of course, more investors who have little means can buy this stock. It can be traded, as a matter of fact. But let me say this. Prior to this, Macy's stock was suffering because of the competition from Amazon and other stores. Now, let us look at let me insert, take a look at the stock, some stock information about Macy's. So I'm gonna go to the graph. So you can see that it's been up and down. Normally, stocks are, have erratic graph. So I'm gonna insert 200-day moving average. That will so that it will so that we can make sense from that graph. Okay, 200-day moving average for Macy's. Okay, so I can see that from here. Okay, good, excellent. So now, okay, can see that it has a downward trend. Yeah, like I explained, Macy had been suffering due to competition from Amazon and other online sellers. So you can see from the year 2019 to the current year period, you can see that all those times it had been trading below the moving average. Now, there was a time it went up a little bit, then went down. So now, even now here, it went up. The reason it went up to and traded well, actually, as you can see from here, actually, it's still trading at below the moving average. But here, recently, it went up a little bit. Why did it do that? Because as I'm talking to you now, Macy has received a 5.8 billion buyout offer from a real estate investor called Ark House Management. and asset manager. Two actual real estate investors. We have it. One is Ark House Management and Asset Manager. His name is Brigade Capital Management, actually. Yeah. So anyway, so this offer values Macy's at $21 per share and was submitted on December 1. So that's why the stock started appreciating. So if you want to make quick money, why this talk about acquisition of Macy is still going on, the price shoot up to this value. That is when you look at the moving average, you can see it's trending down all this while, but now it's the stock is about to go up because of this offer. Now, this acquisition might go through or not. If it goes through, Macy's stock will appreciate. But if it doesn't, appreciate at least for the interim. If it doesn't go through, it will still fall back to where it was. But bottom line is this, that the moving average is trending down. Okay. Now, if I put a 2-year moving average, see, it's still trending down for 2 years. It's still, well, remember, we are still under 200-day moving average, but if I make it for 2 years, stock is still trending down. 1 year, well, 2 years, for long-term investors, 2 years and 5 years are usually the norm. So it can stay trending down. All right. So what does that tell us? This trending down of the moving average, what does it tell us about Macy? Okay. Well, the fact that the Macy stock is trending down, or that is trading below, for the most part, trading below the 200-day moving average. This can be concerning for long-term investors because it may indicate a bearish trend. So when we say bearish, that means the price will fall in the future. So indicate a bearish trend. So that means that it suggests that the stock price has been consistently below its long-term average. And then that means that it potentially reflects investor sentiments about the company's performance and outlook. Okay? Now, having said that, we can now go back to look at the other fundamentals about Macy's. So let's go back, and I'm going to look at the statistics. Okay. So we'll look at pick some data from about profitability, management effectiveness, income statement, balance sheets, and hopefully cash flow statement as about Macy's. So let's start with the profitability. Remember, everything we're saying here is from the period of January 2023 to October 2023. So 1 year period, October. Okay. Let's see. Right now we have that. It will start with profitability. But first of all, let me make sure you're seeing this. Yeah. Okay. Let's start with profitability. Yes. Under profitability, you can see that profit margin of 2.86% and operating margin of 1.95%. So in terms of profitability, Macy's has a profit margin of 2.86%. That's what it means, which indicates that the company retains a modest portion of its revenue as profit after expenses. Also, the operating margin of 1.95% is also relatively low, suggesting that the company's operational efficiency is moderate. Yep. Now, having premised this, we can now turn our attention to management effectiveness, where we have the return on assets, TTM. TTM means the trailing, okay? The return on asset is 3.85%, and the return on equity, 17.95%. So management effectiveness revealed that Macy has the return on asset of these values that I just mentioned, 3.85%, which signifies that the company's ability to generate earnings from its assets. That's what this is revealing us. So the return on equity of 17.9 95%, you can see right here, is more favorable because it showed that Macy's is delivering good return to the shareholders. Okay. Now let's look at the few things that we got from the income statement. We have a revenue of 23.93 billion. So it's a revenue TTM, which means TTM means trailing 12 months for Macy's. So looking at the income statement, the company's revenue for the trailing 12 months was 23.93 billion. With this revenue, and they had a revenue per share of $87.52 dollars. This is per share. So, but this for the overall revenue is 23.93 billion, but for per share is $87.52 per share of the revenue. So, however, there was a concerning quarterly revenue decline of negative 7.8%. You can see right here, quarterly revenue growth for Macy's is negative 7.80%. That make these two values you can make investors uncomfortable about these two values, since it is showing this here. So now, like I said, there was a concerning quarterly revenue decline of negative 7.80%, which could be a sign of challenges in the retail industry in general, or it can be because of company specific issues. As far as I'm concerned, it is competition from Amazon, because like I said, over the years, many of these big time retailers have been going through a lot of competition from Amazon and a lot of online discount sellers of the same product that they are selling. So it can be one of the reasons why this thing happened, that we have this negative quarterly revenue growth. In any case, let's continue. The gross profit of the is 10 billion, but net available, see the gross profit 10 billion, but net available net income available for to common shareholders. You can see the net income right here, which is net income is a fancy name for net profit, is $684 million. Okay, which resulted in a diluted earning per share. You can see the diluted earning per share of $2.45 per share. So the significant decline in quarterly earnings growth of negative, so you can see the quarterly earnings growth of negative 60.20%. So this significant decline should be noted by long-term investor, because it's 60 points. That is a lot. That's a big, okay, big decline. So anyway, let's continue. Balance sheet. For the few items I will look at here is, first one is the total cash. Examining Macy's has a $364 million in total cash, which is relatively low. It is relatively low. A relatively low amount, considering that the kind of operation they have. And it have a total debt of 6.19 billion, resulting in a very high, well, of course, the very high debt to equity ratio. So you can see the debt to equity ratio of 149.40%. So now the current ratio is 1.18, which indicates that the company may face liquidity challenges in the short term. Okay. Now let's look at cash flow. For cash flow, you see that Macy's generated 1.28 billion in operating cash flow over the trailing 12 months, which is positive. It is positive. However, the levered free cash flow is 103.38 million. When you say leverage have to do with debt, So now there's one thing I wanted to say about. I think I missed that part, which is EBITDA for Macy's. So Macy's EBITDA is 1.77 billion. So it's the measure of its earning before interest. We call it the earning before interest, taxes, depreciation, and amortization. 1.77 billion. So it signifies that Macy's ability to generate operating income. So generally, investors look at EBITDA to assess a company's financial health and its ability to service debt. So in case of Macy, this amount of EBITDA of 1.77 billion suggests a positive operating income, but a high debt level need to be but the high debt level of the company need to be carefully considered because it may affect the company's ability to meet financial obligations. So having said that, based on what I have analyzed so far, what would be our general assessment of Macy's? So in my view, Macy's have some positive financial aspects, including a decent return on equity and positive operating cash flow. However, the decline in revenue, the decline in revenue that we mentioned here, say quarterly revenue decline of negative 7.8%, and then quarterly earnings growth of negative 60.2%. The decline in revenue and what also the high debt levels. Then what the 200-day moving average is telling us. He say it is trading below 200 moving average for the most part. This may raise concern for long-term investors. So investing in Macy stock at the end of the day, for the long term, will require a more thorough analysis of the company's competitive position. So, but like I said, Macy is being about to be bought by another company, and they're offering them $5.8 billion buyout to buy them off. And because of that, the stock price has appreciated, it's going up, while the discussion of the buyout is going on. So somebody trying to make quick bucks from that person can just buy and watch it maybe for a few weeks or months and see if it can sell it and make more money. But for long-term investing, which is what I'm advocating for, what I also encourage. Long-term investing based on what I have analyzed too far about Macy's. Well, I would say, unfortunately, the current answer is whether to buy or sell. The current answer is sell. That's my suggestion, to sell, and then put the money in more profitable stocks. I hope you enjoyed my lecture today, and we'll be looking at more companies. So I will be seeing you again tomorrow to analyze our next company. Thank you for listening, and we'll see you tomorrow. Bye-bye.